just say that good morning. I'm Scott Forcino, an associate broker with eXp Realty, the founder of PlugIntro, which we created to solve the problems of not having enough people to know and not having enough value to offer them outside the transaction. So this morning I have with me Zeke Samples. He is a professional, experienced lender. We want to hear all about the market, about Zeke, about his company, their services, what buyers and sellers and their agents should expect, and how to best win in this market. Thank you, Zeke, for showing up today.
Yeah, thank you for the opportunity, Scott. I'm glad to be
here. So tell me, there's so much. Tell me about you and your background and your experience and your company and how you think we're doing here.
Sure. So Zeke Samples with Grow Mortgage. I am located in the Florida area, Central Florida, Tampa mainly. We are a brokerage, and basically we have our home base is out of Charlotte, North Carolina. My really good friend and I, we work together with this. We have a few LOs up here in Charlotte and a few in Florida. And we have been doing this for, I'd say, about 7 to 8 years now. Thing with the market, of course, we've seen a lot of different things. You talk about going through COVID and all those different guidelines that changed during that period, and then pre-COVID, and now with the rates being what they are. So, yeah.
Well, I've heard that I was watching this real estate report that last year was the highest money ever originated, some insane amount of money.
Last year?
Yeah, over the last 12 months or 2021 with the market.
Yeah, 2021 bigger than 2020 for sure. We've seen probably about a 15% appreciation in the Tampa market. So it's just really important to always not let the rates get to you. For example, if you don't buy a house, you're leaving equity on the table. So for a $300,000 loan amount, for example, the difference in 0.5% of a rate is only about $100. Most Americans spend $100 every 2 weeks in coffee and fast food, and rents are also going up. So with that 15% average appreciation over 3 years on a $300,000 home, that's $135,000. If you're spending $2,500 in rent over 3 years, that's $90,000 that you just flushed down the toilet. So it's just keeping the buyers in the real estate atmosphere and keeping them motivated and understanding examples like that.
And how do you work with buyers agents to make that clear? Because I don't know if the agents have that knowledge and able to deliver it like you just did.
Well, the agents I work with, we talk all the time. My close agents, I like to help them. I was always taught in the beginning of my career, stay out of contract negotiation, right? So a lot of times agents would call and they'd say, how should I present this offer? Well, right there, that's contract negotiation. I never want to be the guy that they're pointing a finger at when it comes to that part. But at the same time, I feel like open communication with the agent, with the buyer, that's what I'm known for. It's the communication. I send out weekly updates every Friday to all parties so they know where they're at in the transaction. I think it just helps to always have those meetings and do videos like this to educate people about how the market is changing.
Would you tell us some nuts and bolts about credit requirements, different programs, maybe debt to income, how a loan is underwritten and what you look for and what's the possibilities for buyers out there?
Sure. So right now, conventional loans are really the winning loan programs. A lot of listing agents are afraid of FHA and VA. Mainly, I think it's a misconception though. I believe with the VA buyers are overlooked. Agents worry about the appraisal and they compare it to an FHA loan way too often, when in fact, VA loans are the only loan you really have to earn, right? You have to serve the country to get one. FHA is looking for a reason the home won't work, looking for deficiencies. The VA appraisers look for safety. They are serving the veteran. So say a veteran goes under contract for a $300,000 house and the home appraises for $280,000. When it under appraises, the appraiser doesn't call anybody. They actually invoke something called the Tidewater Initiative. they give the veteran and agent the chance to provide comps for what the value should be. So those are some features that I think really help some of these government loans come back to the table and be strong. But the guidelines for all of these loans, when it goes to underwriting, they all differ. It just depends.
And how has the credit changed? I mean, I heard that the credit scores got a little bit more stricter, looking to be a little bit better scores.
Well, it's kind of it's a loaded question, right? Like earlier this week, we actually had the ability to go down to a 620 credit score on a conventional loan. And, our whole career, we're hearing 680 and above, right? But now we can go down to a 620. I priced it out, and their interest rate isn't that bad at a 620. But of course, when you start to change those pillars, right? You have a pillar of credit, you have a pillar of assets and income. When you start to kind of move one pillar down to compensate for the others, it can change some of the gamut of it. So a lot of these lenders that say, we have a 10% down jumbo, that's great, but what's the rate on that? How much does the rate cost in points? So educating my realtors on that as well is what's important, because all of us want to get in a real estate office. We all want to talk about the best programs we have, the newest and best thing, but a lot of times there's a lot of small print to those programs. I like to educate on that small print so I don't disappoint anybody. And I feel like that respect is what people really appreciate.
Sure. I mean, I would imagine that a big part of your business is quality agent referral partners.
Yes, definitely. But it comes from all angles. I feel like referrals are very important, and it not only comes from the agents, it can come from some of the buyers as well. Buyers will refer me their friends or their family. And whenever I have a family referral or a family member of an agent, that's the biggest compliment I can receive.
Sure. That's built on trust.
Right.
Right. Well, I'm glad you touched on trust, or we got to that, because I don't know if I'm sure you're following this. Trust is under attack. You realize that? I mean, and I'll tell you, I say that for two reasons. All the Wall Street money and venture capital, you saw the Rocket Mortgage commercial in the Super Bowl, $30 million for a minute or 30 seconds.
Yeah.
So there's all this investment in that. Plus, anyone younger has done everything on their phone. They don't want to be sold. They think that everything, press a button, get a mortgage, press a button, go to Amazon, press a button, get to Google, all the information on earth. So it's a little bit of a tough sell now that because they have to trust a stranger. You are a stranger. When you get a referral, yes, it's a warm introduction, but you're a stranger, and they know you're in business, and they don't know about what you sell. So if you think about it, all the money and all the technology is going against you. You have relations with agents and other referral partners and your clients, as you just described, but no one's putting money behind you and your contacts. So this is something that you're a bit younger than me, but I'm kind of warning people that we have, the dinosaurs didn't know about the meteors, but we can see these meteors. So there's every force, they call it fintech, the financial resources and the technology is going against this situation. Zillow attacked realtors, the online lenders for tiny profit margins are trying to disconnect you. All the trends are from consumer to direct provider. So, I mean, the people don't address that are in trouble. Plus, with rates that have risen, tell me about this. Are the online lenders, I know it's tough to get through an 800 number, but are they offering better rates or better programs?
Not offering better rates necessarily, but to go back to your point on technology kind of winning out, I feel like the realtor relationship with the buyer is a person-to-person interaction.
Mm-hmm.
A realtor can be hired from a lead that they paid for or a referral. Now they're introduced to that buyer. Buyer flies in town. Now that's the first time they meet. They're looking at homes. Let me introduce you to a lender. Here's my lender, Zeke. I'm always available to meet buyers. I'm available to FaceTime with them, Zoom with them, whatever it takes to make them feel comfortable. The older buyers don't like to provide any documents by internet. They like to do it in person. That's fine. As far as technology goes, I still feel that there is a importance of follow-up and relationship building that I can offer with the buyers that places me ahead of a lot of those 1-800 lenders. The 1-800 lender is definitely not the same person every time you call. They're not available past 5 o'clock. They're not available on the weekends, and you certainly don't have their cell phone number. So people can text me on a Sunday afternoon asking a question. When's the realtor's busiest time? The weekends. So you have to be available, and you're not going to get that from somebody that is a 1-800 lender.
No question. Plus, the 1-800 lender doesn't care about the person like you do. That's the biggest thing.
The biggest thing I see right now in this market is, I just was speaking with somebody the other day that said they kept fighting me. I'm pre-approved with Quicken for $450,000. Well, I only gave them a $250,000 approval because they were pre-qualified with that 1-800 lender. And I had an actual pre-approval because I was verifying the income, which you can't. Guidelines state if you have 2 jobs, you have to have both jobs for a period of 2 years to be able to use both incomes. Well, this guy's been working at one job for 6 years, the second job for 12 months. Can't use both incomes. So somebody else told him he could. So
I mean, that's a great piece of insight. And that's something you could pass to your agent, referral partners, and or like you're doing right now. That's great insight. I bet really not many people know that.
Sure. And there's conversations I have with my agents too about when it comes to addendums, what really can be seen on an addendum, what we need to not see on an addendum. I mean, working together to get this to the closing table is a very important piece, of course. And I always try to do my best. I like working with newer agents because they have a lot of questions, and I think it helps grow that relationship and strength even more.
Sure, you're providing a resource, and there's no way for them to get this information. You have a number of years experience. They don't know enough, and at best they're learning how to be an agent, not to know about how financing is secured.
Right.
Interesting. Well, I think that you mentioned referrals. I think that a great way to form a closing team is to get together. Usually, historically, that's been in person or reach each other by phone. But in a local business channel like this, and thank you for appearing and claiming your position as the exclusive lender for your agent host that you'll bring aboard. The chance now is for you to have a place, kind of an oasis, where this information is shared and more people are given the opportunity to meet who they should know. That really is the point. Before you're doing it, and of course we've all done it successfully. I have, before YouTube was invented. But it's ridiculous to ignore these resources now, where something of value like you're offering now can be seen by many people basically forever, and share it with their contacts. This is shareable and it's searchable online. So as good as we had it, we have a great way to bring people together and offer them a benefit, whether it's the services they need or a chance to promote their business. And I know that agents really appreciate any positive impact you can make on them. And I think that between you and whatever host that you work with, they would be able to offer a lot to the market and the community of value, learn as much. And that would, I think, when you offer information at no cost, demonstrating you care, that's the best way to build a relationship. People find that they're attracted to you instead of you chasing them.
Yes, I agree 100%.
Yeah, I think that's important. So what I want to ask, what has been your usual approach now? I mean, I know you're working with so many buyer's agents. How are you getting offers accepted by the buyers in this tough competitive market?
Well, one of the big things that I offer is to call the listing agent, or the listing agent. That way, again, it goes back to the pre-approval versus pre-qualification. If the buyer is a 100% vetted buyer, I've ran AUS findings, whether that's desktop underwriter or loan prospector, you basically have an approval for that buyer. And when I reach out to the listing agent, I tell them that I've vetted income, assets, I have AUS findings, approve eligible. It's that extra step that some agents have had other lenders do that before, but then when you find those ones that haven't, they really appreciate it. It helps bump that offer of your buyer up in front of the seller's eyes. So a lot of my buyer's agents appreciate that extra touch. And then it helps the listing agent feel more comfortable with the transaction as well. They're free to call me at any time, and I can talk to them as a piece of the transaction also.
I got to tell you, from my speaking to more and more lenders now that I did, and working and practicing law in this area, what you're describing was not done before. It was really more of not an us versus them, but our side versus your side. And I will tell you that I'm hearing more and more, and I'm still betting that out of 10 offers, not many of the prospective lenders are reaching listing agent. It used to be resistance. Hey, you do your thing. I don't want to get involved in the buyer's financing. But I'm also hearing that that's very much appreciated. So I think that's really amazing, because I will tell you that was not the routine before nowadays.
Those 1-800 lenders aren't calling.
No, and you can't even get through to them.
Right.
It's too much. But I will tell you, I would think that your buyer's agent, think about this. I'm sure, what a great experience for the buyer's agent to get real good assistance from another person representing the buyer. So really you have two shots to get your buyer's offer accepted.
Right. And another point, we kind of touches on this point and touches on a point we said earlier, as far as talking with the agents about helping get the offers accepted. One thing I see with the VA loan, a veteran, I pre-approved him, wants a VA loan because he wants the 100% financing, but I see he's got $200,000 in the bank. Okay, so we can make some VA offers, but if you lose 3 or 4 offers, now your wife's getting a little frustrated. She doesn't like the market, tries to talk the husband out of not buying a house, for example. That's when I would tell my agent, they have good amount of assets in the bank, so they could go conventional if they need to. So it just allows an extra loan opportunity to unfold, and we won't lose a transaction that way.
Mm-hmm. Listen, the teamwork is the only way. Everything from a home inspector to the insurance company. I know insurance now. I have a few friends who are big producers, and I've had them with offering their information in these interviews. That information, just the insurance is more and more credit driven. And look at what's going on. I hear in Florida now where the rates have doubled, and that's really. You as a lender can qualify them based on the loan amount, but you have no idea what the insurance is going to be.
Sure. Right. Well, that's a good point. I always use my expertise to look at the age of the home. So if it's something that's built in the 60s, the 70s, even if it's been remodeled, how remodeled? Do we have a new roof? Is it the same roof? Those are all important points. So when you qualify a borrower and the debt to income ratio is tight, these are the things that you want to tell the agent, because the agent is spending their time and gas as well driving around these buyers, and they want to make sure that whatever they go under contract on is going to stick, right? So being able to tell them, hey, we can't go over $150 a month in homeowners insurance or whatever the number may be, we can be proactive, with a good team on a house. Even though you're having 25 offers in 10 minutes, you could reach out to a good homeowners insurance contact that's on your team and say, hey, I want to do under contract on this house. Can you give me an idea of what this would be? Even without a win mitt and a 4-point, they can give you kind of a ballpark idea. And then the agent's job would be, okay, how's the water heater? How's the roof? So they can kind of communicate some of the ages of those things and then try to make that deal be more solidified.
So it's really anticipating the next opportunity. And another lender mentioned something to me that I also had not considered is the taxes on the house for $600,000 that was bought for $600,000 6 years ago. It's now, let's say, $750 in some of these crazy markets. So the taxes before the closing are paid on a house of lesser value. So now if the taxing authority is aware of the sales price, I mean, I wonder how you would contemplate what might be sticker shock to the buyer to say, whoa, I'm making it based on my debt to income on this tax is this number, and now it's a lot more.
Sure, that's a very important point. And I think that's something that we need to be aware of in this market, especially 2008 crashed for different reasons, but this could be a potential when it comes to some people that could possibly foreclose if they can't afford the house at the current payment, and then all of a sudden they're going to have a $300 a month increase in their payment. It's something to think about for sure.
I think you're right. I mean, it's like 2 out of the 3 factors are not being considered. The insurance and the taxes, the only thing that's considered is the rate times the mortgage, and over 30 years, which we could instantly know what that is. But we don't know the 2 other variables. It's scary. The buyer doesn't know what it could be. The buyer's agent doesn't know. I mean, they're relying on you folks, the lenders, giving a solid 1 out of 3.
That's right. And down in Florida, we've had CDD fees, the community development fees that are on top of your taxes. So they're part of the non-ad valorem section in the tax bill. But I mean, those can be $3,000 or $4,000 on top of a $3,000 or $4,000 tax bill. So, I mean, your monthly taxes could be astronomical. We had a community down here where the seawall actually had fallen and there was some litigation done. Different kind of issue than a condo. Let's say that the HOA is being sued by a developer or something. That would be a non-warrantable condo. But when it comes to single family homes and something like this happens, that buyer can still go under contract, but who's to say what that's going to be? So that's going to be another change that they could experience a year or 2 down the road, where that seawall has to be paid for somehow.
Yeah. So it's unfortunately, you might be the bearer of bad news because don't know. It sounds like a fourth. What is that? The C. What is it called? Say it again. What's that fact?
Well,
the
CDD. So it's the community development, district development cost. So it's basically like the cost of living in a community. There's one Apollo Beach area called Mira Bay. There's one called Waterset. So if people look up these communities, they're set communities. They might be gated communities, but they have a development fee that's part of the tax bill on top of the normal taxes.
So that means, separate and apart from this interview to learn more about you, this is really, really esoteric data, just where you got to really be on the inside to know this. There are definitely 2, maybe 3, based on this community development possible cost, which a lot of places have them. You're on the coast everywhere, that agents should be made aware, because they could just be looking at one thing. I got a pre-approval, and leaving out the 2 big variables. So that's something that we should assemble the agents to, walk around with that knowledge of, if you might need to buy a lower price house because it needs to be a buffer there.
Yeah, and exactly. The buffer has to do with the buyer's debt to income ratio. So
sure,
definitely something to consider. But those factors could fluctuate after closing potentially. One of the things, loan programs that we're starting to really take an interest in now with buyers that remain interest rate conscious are ARMs. People say to me all the time, well, in 30 years, what's my interest going to be if I choose this rate? Are you really going to be in the house 30 years? Who do you know? Name one person that's been in the house for 30 years that hasn't refinanced, died, or moved. So it's
Nobody.
Just not. If you're looking at a 7-year ARM, people average about 4 to 6 years in the house. So if you got that, I believe rates are going to go down in the next 3 to 4 years at some point. You can always refinance out of that 7-year arm. You could still get something that's in the 4s, which is unheard of because our rates now are in the 5s as of, mid-March that or middle of April, I'm sorry, that we're talking. So that's an option.
I got to tell you, that's another really great point, because adjustable rates have been the white rhino. You don't even hear about them anymore.
Right.
So that's really what people are going to need.
Sure. And then you can get into a more expensive home that way if you wanted to, because your rate is now lower. So you have that affordability, or it could be a buffer for unforeseen things like CDD fees going up or taxes going up.
So, again, now I'm thinking we need a specific, almost classroom setting symposium for you to offer agents on those two cautionary tales. But I don't even think it's cautionary. Taxes are going up and insurance is going up. So why is this so speculative? It's not. You should anticipate it.
Right.
So really, if you're skinny on the DTI, you're looking. If you don't have a buffer, there's going to be a problem.
Right. I agree.
And appreciation won't solve that problem because you're not closing, you're not selling. So you're living there, worrying, there's no more Starbucks, that's for sure. And there's, no more discretionary. Plus, here's another one. You ready? Now that we're brainstorming, what about your utilities that went up? And what about your groceries that went up? Those are two more things. Your energy, that's utilities. Your food, look at the prices of things. So now buying a house is based on one thing, and there's three others. Utilities / food, taxes, and insurance they have gone up, and your rates have gone up. So we're talking about really three things that we know out of four are not what they were not too long ago.
That's right. Yeah, definitely things to consider.
Right. So I don't even think that, if I'm correct, you know better than me, the loan to value would cure these problems, right?
Loan to value would cure it in what example?
I'm having more monthly, a real estate trainer I used to say when he was training agents says, we want to avoid the situation where you have more month at the end of your money. So even if you put 20% down, that doesn't affect anything. Your payment's your payment.
Oh, I see what you're saying. So yes, some people want to put more money down in order to just because they're more payment conscious. One thing, like say somebody wants to put 40% down, as long as there's not a certain payment that range that they need to be in, I always ask why. Some lenders out there actually penalize the borrower if the loan amount is smaller. So a loan amount could be $450,000, but let's say that borrower wants to put down $300,000 to bring their loan amount to $150,000. Their cost of that rate or that rate itself for the $150,000 loan could be higher. It's not with us. We have the same interest rate across the board, which is a huge positive because in the lending world, you're not going to make much money, much interest on a lower loan amount because the chances of that person paying it off are greater than if they had a higher loan amount.
So it's in a way a different type of risk for the bank. They're in it for the long haul.
Yeah, exactly. So,
wow. And there's no way people know that. I don't know if I've considered that. There's no way the public knows that. There's no way the agents know that.
Right. So that's one thing that I educate with people as well. And I ask them why. I give them an example. I had a buyer from Idaho that was coming to buy a primary residence in Florida. They could work remotely 100%. And they were going back and forth between that actual example, putting a lot more money down. And I said, well, have you thought about just recasting? Nobody knows what this market's going to do, what the economy is going to do. Why don't you just keep the money in the bank or put it into something that makes you more money? 3, 4, 5, 6% interest on your money. And they said, well, what is recasting? So I educated them on what a recast is. So that's another piece that I like to, you're working for them, right? You're always trying to give them the best impression of you that you can in any point of the transaction, even after you close. People call me and ask me where they make their first payment. So I'll pick up the phone and I'll walk them through their closing package and show them where the payment letter is. It's just going that extra, making them feel like it's not a one and done transaction for you.
Well, listen, if someone's calling you where to make their first payment, that means they're nervous and concerned. I mean, that's an easy thing to find. It's in your documents, but that means they'd rather hear from you.
Right. Well, I've had some that want to make it way early too. So.
Wow. You get the gamut. But I mean, listen, Zeke, I'm very happy we got the chance to talk. And, we feel honored to have a professional like you on board with us. So, I mean, I learned, I'm not ashamed. I'm proud to say I learned 2 or 3 things today. I didn't know about the community. And I think what's the other one I didn't know about? That the loan could be worse for a lower amount. I didn't know that. I mean, I'm only 26 years in this thing. I didn't know those 2 things. So I'm really impressed to have a professional like yourself aligned with PlugIntro. I mean, our next step would be to select your contacts, your agent referral partners to see this. And the best part about it is we'll offer them their own, and they'll be really, really uniquely aligned with you and your professional services and that of your company. Let's schedule the date for our first meeting. Let's schedule our date for our next interview. And would you tell our viewing public how we can get in touch with you?
Of course. You can call me at any time, 386-487-4663, or visit Zeke Samples, that's ZekeSamples, ZekeSamples.com. So that's how you can get in touch with me anytime. And I appreciate the opportunity, Scott, for being on and having this.
I told you this thing is fun and productive. It's really it's our show. It's who we want aboard. It's it's what we want to say. Not everyone's going to be as informative. We can have a little bit of fun too. Bring some people aboard, and your agents are going to really appreciate the opportunity to be seen and to become local famous in their market. And really, at this point, you're working so hard, want to have some fun.